Welcome to This Week in Real Estate with Jonathan Harmon. Listen in as him and other members of the J Harmon Home Team speak about all things real estate with local experts here in the Middle Tennessee area. Be sure to check out jharmonhometeam.com for more information and how to get in touch with our amazing team. Welcome to the show.
We're live. All right. And we're live. So welcome to This Week in Real Estate with Jonathan Harmon, the J Harmon Home Team, powered by Keller Williams. And I am flying without a parachute today. I have no headphones on, so I apologize for that little bobbled start there. But anyway, that's okay. Got Wes Bynum here, Wes Bynum of Bynum CPA, and Wes happens to be my accountant, as he is for a lot of the other upstarts here in town. And some other businesses as well, and other individuals. I don't even remember now how I met you. I think you're a referral from an attorney, but I don't even remember what attorney it was.
Yeah, I don't remember which attorney it was. No, I'm not sure.
It's one of those things where it's like I've just always known Wes. Wes is my guy.
Yeah, that's right.
So it works out. That's great.
I appreciate that.
Yeah. So before we get to Wes, we are going to hear from our buddy Bryan Nale over at Primis Mortgage, big supporter of all things Spread the Positive. So let's hear from Bryan.
Hey, my name is Bryan Nale. I'm a mortgage loan officer with Primis Bank Mortgage. I want to tell you that I absolutely love being a member of the Spread the Positive Network. It's such a great mission and helps bring so much positivity to our community. It's truly a pleasure to be part of. There are a lot of ways to navigate financing a home, and in markets like this, having the advice of a trusted local professional is key to making sure you get the right advice for your specific circumstances. Whether you're interested in the purchase of a new home, second home, or have a need for a refinance, I'd love to earn your trust. If I can help you nail your mortgage, call me at 615-243-3976 or visit nailyourmortgage.com.
Primis Mortgage is a subsidiary of Primis Bank, a member FDIC, equal housing opportunity. As always, all loans are subject to approval. Primis Mortgage, NMLS number 1894879.
All right. Thanks, Bryan. Man, we love you. Fantastic mortgage lender here in town, and a guy that genuinely cares about you getting the right product and the right fit. So, Wes Bynum, let's start with the basic stuff.
Yeah.
How long you been a CPA?
Yeah, been a CPA I've worked in this industry now for, I guess, 12 years. Been licensed as a CPA for 8 years of that, I guess, and been on my own as a firm owner now for 6 years.
Awesome.
Yep.
Awesome. And you're from the area, right?
So I grew up just outside of Manchester in a very small town called Hillsboro. Came to MTSU for college, studied accounting, stayed at MTSU and got an MBA there as well. Worked in Nashville early in my career with a couple other public accounting firms, larger operations, and then came back to Murfreesboro. My wife is a native of Murfreesboro, so this is where we decided to put our roots.
Yeah. So, all right. So you're sitting around in Hillsboro as a young man, and you're like, man, I really want to be an accountant.
No, not exactly. It didn't happen that way. So I grew up part of a farm family. I'm a third generation only boy on my dad's side. My dad's a full-time farmer, and anytime I'm not here in Murfreesboro in the office, I'm helping my dad on our family's farm. So as a high schooler, I didn't really know, what I wanted to do. I kind of thought I wanted to stay and just continue working with my dad on the farm. And I was always, pretty good in school and everything. So my grandfather, who passed away when I was a senior in high school, he had put a lot of pressure on me prior to his passing that I go to college. And, being from a more rural agrarian type of place, it's not everybody goes to college. So I kind of was like, well, yeah, I'll try it out. Like I said, I'd always done well in school and everything. So I didn't know what I wanted to do. Really all I had experience in at that point was agriculture and being a farmhand. And I had a business teacher in high school in Coffee County who I was taking an accounting course, and she said that accounting was the language of business. And, I always knew that I wanted to do something in business. I thought it would tie back to agriculture for me, but I didn't know exactly how. And when she said it was the language of business, I said, well, to be good at anything or in any culture, you should start by knowing the language. So,
Mhm.
really, that was it for me. So, I started MTSU as a declared accounting major and stuck with it.
So you didn't change your major?
I never changed my major.
Oh
No.
man, I don't know how to relate to that. I changed my major multiple times.
No, I came into MTSU. I had done some dual enrollment stuff with Montlos, so I actually finished my bachelor's in 3 years and then went straight into the MBA program at MTSU
Nice.
and finished that in like a year and a half. So,
Yeah, it took me 8 years to get out of school, but that was a bachelor's and a master's. And my father never fails to remind me that there's lots of people that go to college for 8 years. Most of them are doctors. And I'm like, "Yeah, thanks, Dad. Appreciate that."
yeah.
So, anyway, all right. So what is it about accounting that I mean, obviously the language thing, right?
hmm
That's a pretty cool way to look at it. I've never really thought about that. But what do you enjoy about your job? What do you like?
hmm
What helps you wake up in the morning and go into the office?
Yeah. So, from my perspective, accounting it's kind of a niche thing in the business world. It's something that everybody, every business owner needs some knowledge of, but it's not something that everyone just naturally knows. Like, you
Mhm.
know, I don't think that there's many people who are just naturally great at accounting. um, Accounting is something that you learn, and it's as much legal as it is math. Everybody thinks that accountants are just really mathematicians, but that's not really the case. In the real world, we deal mostly with laws and
Mhm.
how to apply those laws to business. And I just really like being able to take the knowledge that we have at the firm and be able to pass that knowledge on and help small business owners be able to succeed by presenting this, legal language in ways that, everybody can understand. I just like to be an approachable guy, and all the employees at the firm are also very approachable people, and we just like to be a good, clear, channel of communication for our clients to know that we may have to research something for you, but we're going to deliver it to you in a way that makes sense and can apply to your business. So,
Well, and I kind of look at it like this is that if you live and work in the United States of America, you have an obligation financially to someone, right? Whether it's the federal government, in some states, the state government, county government, you have some type of a tax obligation
mhm,
to folks. And on the simplest level, you can calculate it on your own, and you can write a check, right?
mhm,
And call it good. But if you're like me, you want to minimize that obligation as much as possible,
mhm,
not because you don't want to participate in in your culture or society or whatever,
mhm,
but because ultimately that affects your bottom line.
yeah,
And if you're a small upstart business, $10 can make a difference.
sure.
$1,000 makes a huge difference.
Mhm,
So I want somebody that not just is aware of the laws, but knows how to use those laws to help me
mhm,
pay less, right? To reduce my expenses, to reduce that exposure. And then the flip side of that is to take that liability onto their shoulders so that if I get audited or whatever,
mhm.
that somebody else says, no, this is to be my advocate,
Right.
right?
Yeah. Yeah. So, you know, anybody working in the real estate field, whether you're a self-employed realtor, a real estate investor, a builder, contractor, there are a lot of opportunities that exist for people who have careers in real estate related fields as far as the tax code goes. It's really important if you're a person who works in this industry to have a professional, to have a CPA partner on your side, someone that you mesh well with and you have confidence in the information they're delivering and sharing with you, because it can make a lot of difference. There's a lot of opportunity out there, but there's also some risk associated with decisions that we, make in how we apply certain parts of the tax code and laws to specific situations. So, yeah, I mean, I always recommend people that are in the real estate, field, whether you're, just a startup realtor all the way to a developer, it pays to have a CPA on your side, to have somebody that's familiar with these laws. I always tell people, I deal with a lot of, startup realtors, and um, for a while, people tend to think that they can still manage their taxes and, on their own, and that TurboTax or other products like that are still a good idea, but it's really just not the case. Some people
It is if
don't.
you're okay with just stroking a check for whatever it spits out the number.
Yeah, sure. But, any person who is out here, working for themselves, self-employed, that, you should have more concern than that, because self-employment tax is a big deal.
Hmm. Yeah, for sure. And one of the things that I tell folks a lot of times is that one of the smartest things that the federal government ever did was to use the W-2 and to take taxes out of people's checks before they ever touch the money, right? So if you get a paycheck and your taxes are already taken, you're conditioned to say, if somebody says, "Well, how much do you make?" You look at the check and you say, "I make whatever, per paycheck, and that's what I make because that's what the check says." But then if you dig a little deeper into that pay stub, you realize, no, in fact, you make significantly more than that, but you pay your taxes in.
Yes.
And a lot of folks don't think about it like that because they never touch the money.
Yeah.
And worse, they're thankful to get a tax return. And it's like, that was your money to start with, you know?
Yeah. Yeah. I think there's just a general, some general misconceptions around some of those things that exist, with, um, the general public and those that work normal W-2 jobs. You do become conditioned to not really pay a lot of attention to how taxes are affecting, what you have available to take home and to live off of. Where when you become self-employed, like we deal with a lot of people who have taken, real estate related opportunities as a career change. They're coming from something else. They've been a W-2 employee, and then all of a sudden, bam, there you go. All these new considerations exist. You have to plan differently. You very quickly learn, usually after the first year, the importance of planning for like quarterly estimated tax payments and how all that works. But yeah.
Yeah. Every quarter when I write that check, I'm like, oh, this hurts.
It hurts. Yeah.
This hurts.
It
Yeah.
hurts. Yeah. But it kind of changes how you are conditioned. Like you mentioned, if it's held out incrementally out of a W-2 paycheck, you just don't pay a lot of attention
You
to
never
it.
touch it.
No one does,
Yeah, you
because
never
you've
touch
never
it.
had it. But when you have to plan for it and pull it aside into savings, and you see it there and you see it there, and then all of a sudden you don't see it anymore,
Mhm.
you start thinking, wow, there has to be ways to try to do a better job at managing this down, because I feel like it's considerably more than,
Yeah.
than it has been in the past as a W-2 employee. So.
Yeah, no doubt. So it's always always a fun time. My own little form of revolt is on the envelope when because I mail my check in
Mhm.
for quarterlies. I always write infernal revenue service, and I feel like I'm being a little bit of a rebel. So I'm sure I'll end up getting a
Yeah,
yeah.
that's
And
okay.
and I have actually been known to write infernal revenue and then put parentheses or quotes around service as well.
Yeah.
I'm gonna probably get audited, but that's all right. So, all right. So let's talk about some of the things as self-employed, specifically in real estate. What are some areas that people can experience some tax savings and reduce that tax liability a little bit?
Yeah, so I would say, as someone who's just starting out in real estate related businesses, if you want to educate yourself and kind of gain familiarity in how real estate activity involves your overall tax picture, there's really two different tax forms you need to familiarize yourself with on the federal level. If you own rental properties, you want to familiarize yourself with the Schedule E. and understand how it flows through. You can always download these things off the internet, just straight off the IRS's website, and just play around with them. I mean, you don't have to, be a rocket scientist to just put some numbers in one of these and see how it works out. Be familiar with the different categories of expenses and how they're listed on this Schedule E. It will answer a lot of your questions as far as what types of expenses related to me owning this rental property are legitimate, because they either fit in one of the categories listed on that form, or they're other. If you have things that are other, you need to talk to a professional. But looking at those general categories is always a great thing.
What you're saying is there's really not a whole lot of other stuff.
Not on the rental property side on that. It's fairly
most everything should be categorized.
Yes. Okay. For the most part. There's a little subjectivity that's involved, but that's when you get to that point, you should be with a professional anyway.
And correct me if I'm wrong, if you put a big chunk of stuff in other, that is a surefire way to get audited.
Well, I would say yes. I mean, we don't have statistics on that because they don't share that.
It's a red flag.
It's a red flag for sure. For sure. Yeah. Miscellaneous and other are not good words.
Especially if they're big, huge chunks of money.
Yes, absolutely.
Gotcha. Okay. Sorry to interrupt.
Oh, no. And then on the other side, so Schedule E, if you have rental property, if you're a self-employed realtor, familiarize yourself with the Schedule C. Schedule C, it's at the heading of it, it says profit or loss from small business. It's the form that you use for a sole proprietorship. So when you're out there and you're self-employed and you're going to get a 1099 issued to you by your brokerage, you're considered a self-employed individual. And that Schedule C, it kind of operates like a profit and loss. You've got your revenue at the top, then you've got all these different categories of expenses. Once again, it's just really valuable for someone who's going into self-employed work in the real estate world to just, it would take no more than, 30, 45 minutes of sitting down with one of these and looking through it, looking at those categories and thinking, about the activities you do and how they fit into these categories. That will answer a lot of questions about, is something deductible?
Yeah. And if that's not your jam, if you don't want to sit down for 30 or 45 minutes and think about all of your expenses,
right,
then get an accountant.
Yep. That's what we're here for.
Right.
A couple of the very common deductions available to people who are self-employed in real estate that we use all the time are, of course, the mileage deduction. And then most people who are self-employed in real estate qualify for the home office deduction. Those are a couple of the more common things that are a little bit outside the box that you won't find listed on those forms. But mileage deduction, I stay on our clients, pretty hard about making sure you have good documentation of it. It is a more auditable item for sure.
I use the Mile IQ app personally.
Mile IQ app is great. It's one of the best tools that there is out there. There's a little cost associated with the subscription, but that's
deductible too.
It's deductible too. There you go. Now it's super easy to use, and it's a great way to make sure that you have an IRS approved format of your records.
Yeah. It's great. So every you can do it every day, every week, every month, whatever. You can go in and just swipe one direction or the other for business versus personal expense. For a trip, it logs every trip automatically, and you can just spit out reports like that on whatever time frame you want.
Yeah.
So pretty good app. So what are some other things that let's say somebody that kind of has a little bit of all of that, right? So own a couple of rental properties, they're self-employed, 1099 for real estate. What are some things that maybe you don't think about? Mileage is a pretty easy one. The home office expense, that's kind of a double-edged sword though too, because then that sets you up for some potential tax liability when you go to sell that house, correct?
Yes, that's correct. Yeah. There's a depreciation component to that that you have to recapture if you sell your primary residence. So it does create a little tax liability, in the long term, if you've taken it on the same residence over many years.
So, and some people are okay with that. It's just, honestly, it's just a numbers game, right?
It's just a numbers game. Yeah. Most people prefer to have tax savings up front, even if they know they're going to owe something later on because of a decision that we're making, in the current year. So we just try to do a good job of warning people, and telling people. Same goes with vehicles. We deal with a lot of people who want to depreciate a vehicle rather than use the mileage method. Probably less in real estate than some other businesses, but we always have to tell people, once you take depreciation on that vehicle and we write it all off in year one, and you go and you sell that vehicle, you're going to have depreciation recapture rules that apply to your situation. So we just try to do a really good job of communicating to people. As you know, we live in the information age. Everything's right at your fingertips, which is a good thing and a bad thing. There are tons of guru type videos out there that people see on social media shared, or YouTube and so on, that are shared tax tips that sound really great on a 20-second video on social media, and then they come into us and we have to break these things down and kind of debunk some of these myths that are being spread that way.
Sure.
So,
Well, and throw out all the caveats, right? And that's the big thing.
there's always caveats. Yeah.
Yes, that's true, but
Yep.
yeah.
Exactly.
And what I appreciate about you guys the most is I call you guys with all kinds of random stuff, and I'm like, hey, I heard about such and I'm the guy. Look, I'll tell you, I've been in business for 14 years. I still don't know very much about all of that. Like there's a whole lot, because there's just a lot.
A lot. Yeah.
I mean, and it changes constantly.
Oh yeah. Changes constantly. And that's why, once a person gets a more complex tax situation, it just makes sense to work with a professional firm that you trust, because we dedicate a lot of time to continuing education just to continue being able to share good information with our clients. Spend, many, many hours of continuing education credit that we have to get every year just to stay up on, laws and current legislation, and, how that would affect our clients.
So every now and then, there seems to be a big push, kind of nationally, culturally, for a significant. And there's some people that this is like their stump all the time, right? For a significantly simpler tax code, right? So flat taxes and things like that.
Yeah.
What are your thoughts on that? I mean, obviously, it would reduce your workload.
Yeah, I think that in the span of my career, I think that I will probably live to see a day where personal taxation is made simpler. I don't know that it'll ever be like a postcard system, like, you hear people advocate for, but I think at some point, technology is going to be good enough that a lot of people who are good candidates for TurboTax and those kind of products right now, that are having to log in and, mess with that, figure all that out and do their filing on their own. I do feel like, in the next decade, I think we'll be looking at a time where the IRS has access to so much of your information that personal taxes that are just the most simple personal cases will be mostly automated. That won't affect people that do what we do a whole lot, because most people that we serve are complex cases. The IRS, and they will never have record of a person's self-employed activity, because that's all things that happen throughout the year, and you have the records, right? No one else has them. So serving self-employed and small businesses, as we do mainly, I feel like there will always be a need for us to some degree.
So for the non 1099 folks out there, what are some things that they can be doing throughout the year? So your kind of standard W2 folks. What are some things they should be doing throughout the year to help them reduce their tax liability?
Yeah, we always point people in the direction of retirement savings. Unfortunately, when you are a W-2 employee, not many of your tax breaks sound very fun. So it's all around, saving money. It's retirement savings accounts. Make sure that you're participating in your employer's plan. Grow in discipline enough to at least be contributing enough to get that match that they put out there. We really preach that to people. And then also be aware of what kind of healthcare benefits you have. If you have a high deductible health plan, be sure you're putting money in an HSA account. It may not be this year, it may be the next year. That at some point you're going to need some money to go to the doctors, and your family will need that. So that money you put in an HSA account is, pre-tax money. So
Now, are they still use it or lose it?
an HSA is not a use it or lose it. You own the account. It operates really like a standard checking account with a debit card. The money carries forward with you forever, indefinitely. And HSA accounts are unique. They're a really good savings tool because you don't pay tax on the money you contribute up front. It grows tax free, and then you spend it on medical bills tax free at the withdrawal. So it's a triple tax free effect there.
So it makes a whole lot of sense to participate.
Makes a lot of sense. Yeah. Anybody who is, a lot of self-employed people have high deductible health plans. I do myself, and for my family. So I utilize an HSA account myself. So it's a good thing for people who have that type of insurance that aren't, used to having, the benefits of co-pays and all that good stuff. So
yeah, there for a long time, I participated in a healthcare cost sharing ministry. And so it was exempted from the mandate during that time frame. But it was also not tax deductible, right? It was contribution into our own pool kind of thing.
Right.
But it worked pretty well. But again, you almost had to marry that with something like a high deductible plan or even an HSA because you paid it out of pocket and then were reimbursed.
Right.
So it was interesting. It was a way around. Because again, one of the more interesting things that's ever happened was when health insurance became tied to your employment, and that honestly, that's probably why health costs are what they are. One of the big precipitating factors of that.
Yes, I would agree.
So people just disconnect from what it costs.
Yep.
I remember one time I had to get a procedure done, and I didn't have insurance. I was doing the healthcare cost sharing, and so one of the things that we were kind of, I guess, obligated to do as part of this ministry was to call around and shop around and try to get the best price on stuff. And it was an MRI, and I called. There were 3 companies here in Murfreesboro that did what I needed to get done. And I called all 3 of them to get their cash price on how much it cost to have that MRI done. And 2 of them were able to tell me. It took a minute, but they were able to tell me. The third one said, we have no idea. We can't tell you what that costs. And I was like, what? And they're like, well, it just depends on what your insurance pays. And I said, well, I don't have insurance. That's the whole point of this question. They're like, well, we don't have a structure for that. So they couldn't even tell me how much it would cost for me to pay for my own MRI.
Yeah, that's crazy.
It was wild.
Yeah.
But that just tells you the level of disconnect between the cost of a procedure and the procedure itself.
Yeah, sure.
So pretty wild. All right. So from an investment standpoint, you mentioned the Schedule E stuff. What are some things that people can schedule out? What are some things that that people need to know they're buying their first investment property, that kind of thing? What should they be tracking?
Yeah. So I would say there are a few things to become familiar with if you're interested in getting into the real estate investing space, whether it's holding for long-term rental, or if you're considering doing a flip, anything like that. So first of all, I would say you need to become familiar with depreciation and how that works. Depreciation, it does help you every year because you're able to write off a portion of the value or your purchase price basis of that property. There are some caveats, of course, as in everything. So that's a big help. We are seeing recently in the investment space a lot more cost segregation studies that are happening. That is when you have an outside firm that comes in. There are many companies that do this, and they actually break out different components of the property that you're purchasing, and they provide you with a report where they break out and list separately some of the components of this property that are eligible under the IRS guidelines to be treated for what we call accelerated depreciation. So, for example, if someone comes to us with no cost segregation study on a rental piece of rental property that they're going to keep for many years, and for example, they say, well, the land was worth 50 and the structure's worth 200 for a total of 250. If we don't have anything else, then you've got land listed at 50 non-depreciable, and then you've got $200,000 building. And if it's residential, it's 27 and a half year straight line depreciation. So with a cost segregation study, what happens is they can provide us with a report that says, exterior sidewalks are one thing that they break out. Some electrical wiring, appliances, HVAC. There's some odd and end things that they'll pull out, and they will come up with, $20,000-$30,000 out of a property of that value.
So your $200,000 property that you would stretch over 27 and a half years now becomes a list of components, and some of them might be 5 years, and some of them might be 10 years, and some of them might be
that's right
2 years or whatever.
That's right. Yeah. And it allows us to speed up depreciation on some components of that property and help people lower their tax burden in the now. Yes. Yeah. Which, if you've, time value of money concept tells you that $1 saved today is worth more than $1 in the future, so.
And if you're on a growth strategy where every couple of years you're going to add another property or two, then you can continue to do that as you build your portfolio.
Yes.
And then at some point, when you've run out of those depreciations, you maybe stop earning quite as much on a 1099, for example, and you switch to earnings only on the rental income.
Yep, that's right. So we're seeing more of those done. It's an investment on the front end for, a buyer to do that. It has to be done in the first year of ownership, and the tax treatment of those things have to happen in the first year that you own that property. So it's something that you kind of have to plan ahead for and know if you're looking at buying an investment property that you're going to be interested in cost segregation. So that's a more popular thing now than it was in years past.
Yeah, it makes sense. And to your point, that time value of money aspect.
Yeah. Another component related to real estate investing that I always like to talk to people about is the difference in the definition between a repair and an improvement to a property. This is a big deal. This has gained a lot of attention in the last 2 or 3 years. There's been some significant tax court cases on it actually recently, and there's a lot of reading you can do on it. But the difference between repairs and improvements is very important to familiarize yourself with, because a repair on a property is able to be expensed, and deducted immediately year one, the year that the expense occurs. An improvement, however, is something with a longer life considered to be attached to that property. I always tell people it's something that you can't pick up and carry off with you. Those improvements are depreciated like the building, the structure, over a long life. So a lot of times people think that they are, doing something to a property to bring it up to a standard, and they're going to get all this tax benefit in year one. And then they later find out, well, that's an improvement to the building divided by 27 and a half years.
So give me some examples. Putting a new HVAC.
27 and a half years.
So
as crazy as that seems.
It's an improvement rather than a repair.
Because it's actually considered attached.
Putting a new dishwasher in.
That's a repair.
Okay. But to me, that's the same thing.
Right.
Like in my head, those are appliances that make that house habitable or functional.
Yeah. HVAC is one of that's a really gray area one, because, duct work is considered one thing. So
that doesn't make any sense.
No, not at all. But something like a roof, a roof has a long useful life, and it's attached to the structure. So
even if you're repairing a roof that was shot, no.
If you're replacing a roof,
okay,
it's an improvement.
But if it's not repairable, you have to replace it.
It doesn't matter.
Okay.
Yep.
Gotcha.
Yep.
Yeah.
So there's a lot of gray area in that, but there's some really great resources out there that pretty much spell out, most of the things that owners spend money on and will tell you, which category it fits in. So
Replacing flooring.
flooring is generally an improvement.
Okay.
Long
Paint.
off. Paint, usually a repair.
See,
Yeah.
to me,
Patch of
again,
paint. Yeah.
same things, right? But
Yeah.
yeah,
It's crazy.
yeah.
But yeah, like I was saying earlier, information age, there's tons of great reading out there on that. And, I think if a person is making decisions on how to best spend money to bring a property up to a certain condition, and you're an owner that's very interested in tax savings, it's very important to understand, where your expenses fit into that is a repair improvement.
And it's not to say that should dictate what you do to the house. The condition of the house.
No, not at
dictates that.
all. Yeah, exactly. I mean, there's going to be benefit for you either way. It's just, is it immediate or over time? And ultimately, you got to do the right thing for the property and the tenants anyways.
For sure. For sure. All right. What's the biggest benefit to owning rental property besides income?
I mean, I believe it to be long-term appreciation and value. I mean, I think specifically in this geographic region, we've seen that, even more strongly than other parts of the country have seen it in the last few years. I mean, there's tons of people, we've had many, many clients who've been able to, get out, sell some rental properties that they've owned for 10, 15, 20 years and, make a very good profit on it. Of course, volatility in the market exists always in real estate, as it does with any kind of investment. But this region, the greater Nashville area, has proven to be a really good place for people to own them.
Yeah, if you plot, I always tell people, if you plot it out like a roller coaster,
Yeah,
it'd be the most boring ride in the park.
Yeah, that is true, but that can be a good thing though.
It's a great thing.
Yeah,
as far as I'm concerned.
yeah, me too.
Yeah. We like boring sometimes, don't we?
Oh yeah, absolutely. Yeah. Can't you tell?
Yeah. Boring and predictable.
Yeah.
Yeah, I like it. Okay. Well, I guess the last question I would have is, if I am that W-2 person, what is it? What is the difference, and what do I need to do? A lot of folks don't itemize, right, as they're prepping for taxes and that kind of thing.
Right.
So what are some things you said there's not nearly as much available to someone in that situation? What are some things that people frequently look over and forget to do?
So, I always tell a lot of our families and individual tax clients who may be W-2 employees and may feel like a fairly simple situation, I say, although the limits on standard deduction versus being able to itemize have increased greatly the last couple of years, I say don't overlook that. For a couple of different reasons, I believe it's a good idea to still track those items and turn them into us. Let us add them.
What are some of those items?
So, your mortgage interest, of course, is one that most people have. Property tax, charitable contributions to qualified organizations like churches and nonprofits, out-of-pocket medical expenses above and beyond what insurance covers. Those are really the big ones.
Childcare.
So childcare is different. That's a credit. So it's not an itemized deduction. It's actually a credit. So yeah. So those are kind of the big
School
categories.
expenses.
Only through pre-K. No private school tuition's deductible.
College tuition.
College tuition can be. Yes. There are a lot of caveats around that. There are a couple of different federal tax credits that exist for either students that are enrolled or the parents of students that are enrolled, depending on whether they qualify as a dependent of their parents at that time or not. So, a lot of these things, I know I say it depends a lot because it does.
But I was going to say that's the point.
Yeah. So a lot of what we do, inside the office and when we're looking at a client situation, much of what we do is just a decision tree. It's a yes or no. We work our way through until we come up with the best answer for that individual case.
It's like the biggest choose your own adventure book ever.
It really is. It really is. And as boring as it seems, when we get to apply it to different situations every day and serve many different people, it's really not that boring to us because we get to see it really make a difference. And, we hope that the knowledge we're able to pass on to people really helps them and their families.
Yeah. Yeah. I mean, anytime you can put an extra whatever in someone's pocket's a good thing, right?
That's right. Yeah.
Yeah. Very good. All right, friend. We do have a thing coming up in, I think it's in October, that you're going to be part of over
Yep.
at Cedar Glade. We're going to talk about tax implications, specifically about real estate investing and
Yeah.
and self-employed and that kind of thing,
Yeah.
and some ways to prep and be ready for that next tax season.
Yeah.
All the right stuff to gather up and where to do that. So it'll be a fun free seminar. I say fun. It's not fun for me. It's fun for him.
It's kind of it's kind of fun. Yeah.
Like I said, fun for him,
Yeah,
not fun for
yeah.
me. But it's extremely useful. It's extremely beneficial. And my son asked me, he goes, "Well, how do you get out of paying taxes?" I'm like, "Die," and that's about it.
That's pretty much it.
Yeah, I
Yeah.
mean, that's about it.
Yeah.
So,
I have to deliver that news fairly often to people.
yeah,
Everybody wants to know how to pay no taxes. The
yeah,
answer is don't make any money.
yeah, or die,
Yeah.
or
die-
both,
Or die or both.
Yeah, exactly. So, and we didn't even get into gift taxing and estates and all that kind of stuff. That's a whole other.
Yeah, there's so much to talk about. And I mean, really what we were able to cover today is really just the tip of the iceberg, even as it relates to what's available for, realtors, builders, investors. There's so much information out there. So we always welcome you to reach out to us at the office. And, if you want more information.
And I'd say I know a whole lot of folks that have become accidental landlords, right? Where they, for one reason or another, they kept a house, or they got married and they each had a house, and so one is now a rental property. You specifically, if you are in that boat, you definitely need to have a conversation with Wes.
Oh yeah.
Buy an hour of his time and learn about some things. You're in this situation, so how do you capitalize on it?
Yeah, absolutely. Yeah. We have many clients who are families who, due to one reason or another, may just have one, rental property, but it's still important, if you own that one rental property, that you have a general understanding of how it works and how it affects you.
Yeah, and how it can benefit you.
Yeah, and how it can benefit
That's
you.
the big thing, right? So reap the benefit. You're doing it. You're providing someone else a home, so take the benefit for that.
Absolutely.
Yep. Very good. All right, Wes Bynum, Bynum CPA, over on Church Street, and website, phone number.
Website is bynumcpa.com. Phone number 615-896-2864, or reach me directly by email at Wes, WES, at Bynum, BYNUM, CPA.com.
Beautiful. That's it. Trent, you got anything, bud?
No, that was awesome.
Well,
yeah,
we are live, so it is Monday, the week of Charity Chopped.
yeah.
So
Going down.
I think we need to talk about that for just a minute.
Go
So,
for it.
are you familiar with Charity Chopped that
I am.
Shannon Wheeler does?
Yeah, I am.
So, did you know that I'm one of the chefs?
I did not know that.
Yeah. You're looking at team food right here.
Oh man.
Yep. So pretty excited. We get to help raise some money in my lane here for Second Harvest Food Bank. And then the other two teams raising money for Amelia's Closet and then for Rutherford County Habitat for Humanity.
That's awesome.
And so I'm pretty pumped about it. So it's me and then Jason Matheson from Primrose Table are cooking together. And then I know the other teams, Becky and Sean Hackinson, right? Becky Lanham and Sean Hackinson.
Yes.
Is that right?
Yeah,
and then is it Kara Kemp and Laura Gossett?
Yes.
Is that correct?
Yeah, I saw that. Yeah.
Yep.
Yep.
And so anyway, pretty excited about that. Chantel over at Simply Pure has been putting the pantry items together and sent us an email list of everything that we're going to have, staple items, because they hand us a box.
Right.
They're like, good luck.
Yeah.
And then so I haven't really thought about it too much, but I got that email this morning and I looked and it said, and you can bring 5 other items to, make your recipes yours. And I drew a complete blank. I have no idea what my 5 other items are going to be. So I'm like, can I bring some Omni Hut teriyaki sauce? Like that's my favorite stuff in the whole world. So shout out to Miss Polly Walls there for still making that stuff. It's delicious.
Hey, so evidently there's some questions that came through.
Okay.
And they're not showing up on my end for some reason, which is really frustrating. So to the people that have questions, we will respond in the comments when I see the comments. And sorry I didn't get to do that.
Okay. Yeah.
Brian just texted me. Thank you for letting me know, Brian.
Thanks, Brian.
Yeah,
So
my bad on that.
When you pull this up on Spread the Positive and J Harmon Home Team, there'll be some questions. It sounds like
that's awesome.
For you.
Yeah.
Glad people asked.
So
sorry they're not coming through. That's really frustrating.
I notice I just took that monkey off my back and put it on Wes's. So if Wes doesn't
thank
answer,
you for that as well.
Yeah.
But no, we'll address them or try to at least.
Yeah, no problem. And if you have any questions following this, like I said, just feel free to reach out. We just want to be a good resource.
Okay, I got it.
Community.
Oh, we got one.
Okay,
I got one. What is the best way to pay my minor children if my business is an LLC?
The best way to pay minor children if business is an LLC. So we deal with this, fairly often. More established businesses are interested in doing this. Businesses that are interested in the tax deductibility of wages. Your children can be eligible to be on your payroll if certain conditions are met. You do, of course, have to really have a formal payroll running as you would if you were, paying other employees. There are some ins and outs on some dollar value limits on, how much you need to pay them. And then also you do have to actually document that they are providing a service to your business that is legitimate. The most common one that we see is whenever parents of children use their children in marketing and advertising materials. I don't know why that is, but that's just what we see most commonly. But yeah, there are some specifics to that that complicate it just a little bit around tax withholding and how you set them up in a payroll system. So if a person is interested in doing that and needs further guidance, they can talk to us.
That's not a TurboTax thing.
That is definitely
not a setting on TurboTax.
Definitely not a TurboTax thing.
Yeah.
All right, we got one more from our guy Brian himself. He says, "How are passive real estate losses treated compared to passive income?"
So most people who are real estate owners are considered passive in it. There's a difference in the IRS rules on, someone who's considered a real estate professional that only works in the real estate field and how those losses and gains work versus the normal people who rental is truly a passive activity for them. Passive losses can only offset passive gains. So this is a very common misconception. So the IRS, the tax code really divides your income in two categories. I call the first one active category just because it's the opposite of passive. And then there's passive category. So when you work a job, and you're providing a service or, whatever for money, that's active, but when you own this rental property over here and it's generating money, that's passive, right? So a passive loss, like let's say that you have a rental property and by the time you had some repairs, things that happened during the year, depreciation, you got a little bit of a passive loss. Well, that passive loss cannot carry over and decrease your taxable income from the work that you performed in an active job. So that's bad news that we have to deliver very often.
Because the thought is, okay, I made X number of dollars in commissions, for example, as a real estate professional.
Yeah.
And then I had lost, right? I had this loss over here.
Mm-hmm.
And so, I have an extra $1,000 worth of loss over here. So I should be able to decrease my 1099 by $1,000, and it doesn't work like that.
Yeah, I mean, and you would naturally think that. I mean, just
because it's all going to the same pot.
Oh yeah, sure. So you would naturally think that that's how it would work, but unfortunately it's not. And passive losses are carried forward into future years. So, that's the silver lining to it is just because you don't get any benefit to it this year, if that same rental property, yields a profit the next year, you can decrease that passive income that happens the next year with the passive loss
So you
from your
don't
prior year.
lose the loss.
You don't
so to
lose
speak.
you don't lose the loss. No, it's just can only be applied to like categoried income.
Interesting.
Yeah.
But the where that really comes into play then is that if you acquire a couple more properties, and as you go and maybe you sell some, and you do some of these other things with those rental properties,
Mm-hmm.
you can start to shrink that income,
Oh,
pay
yeah.
the notes down on it, and
Mhm.
at some point when you've run out of losses,
Mm-hmm.
necessarily, you've now got paid for, or mostly paid for,
Mhm.
real estate properties that are generating you revenue.
Yeah, yeah. And it's very common for us to see an owner of a new rental property to have a passive loss.
Sure.
At least in year one, when you have to go in and make some, significant repairs, more
Yep.
so than you expect to do in future years. So very, very common thing that we communicate with people. It's a great question.
One thing that I found interesting that I learned probably 3 properties ago is the rule about when you get to start, or when you have to start putting that property into your taxes. So, for example, I had a property that I did significant improvements on it before I could put it in service,
Mm-hmm.
and those improvements straddled the calendar year.
Right.
So I didn't get done
Mm-hmm.
until whatever February,
Right.
and that's when I started renting it. Well, most of the expenses came in September, October, November, leading up to finishing the work in February.
Mm-hmm.
Well, I couldn't take those expenses
Mm-hmm.
for that year because it didn't go into service until
Right.
the next year.
Yep. Placed in service. That's the language that the law uses.
Mhm.
So that's another very, very common thing that we communicate to clients who are doing projects like that.
Yeah. So if you acquire a property in November and
Mhm.
it takes you a month to get it,
Yeah.
fixed up and ready to go, or and placed in service, is that when you actually have your first lease, or is it when you start marketing
It's
it for lease?
when you start marketing it.
Yeah.
Yeah. Yeah. When it's prepared and could, fit what it's intended to do.
Yep. So just a one little, there's a little preview of what's to come at
Oh,
our
yeah.
seminar in
Oh,
October.
yeah. Yeah. It'll be a good time.
Yeah, for sure. All right. Well, I appreciate it.
Yeah,
Charity
those are great
Chops,
questions.
come see us this Thursday, Cedar Glade Brews. We got a watch party. If you don't have a golden ticket, then you can come join us at CGB. Got some other fun stuff coming up. The Low Country Bowl happening at CGB as well, and a couple other things. So, Trent, appreciate you.
Yeah, man.
Thank you
Back
for
at
always
you.
helping
Wes,
spread
that
the
was great,
positive.
man.
Yeah.
I was really impressive off the top like that.
Yeah.
I was like, man,
yeah.
that was really impressive.
And
man.
we only scratched the surface.
know,
This
that
dude
was-
is a walking encyclopedia.
Dude,
y'all.
that was nice.
Well, thank you for having me. I really do appreciate it.
It's my pleasure.
Yeah.
Thank you for what you do. If you guys have any real estate questions, give me a call. If you have accounting questions, give this guy a call. And if you have mortgage questions, give our friend Brian a call. And then last but not least, if you want to share your story, give my boy Trent over here a call. He is a story sharer if you're the storyteller. So
That's right. We'll push record.
pretty
And
excited.
thank you to
about that.
Brian for letting us know he had questions. I will get this resolved on my end because that's kind of the whole point of this.
That's kind of the whole point of going live.
Yeah.
That's right. So, all right,
thank you, Brian.
appreciate it. Thanks.
All right.
Y'all have a good rest of the week.